Hello, welcome back. We are at step 2, which is explore the language. And so today we're going to talk about some of the common terminology that you would hear when people are talking about various things within the stock market. So let's start with the basic foundation. What is a stock? So a stock is representation of ownership in a publicly traded company. Let me repeat. It's representation of ownership in a publicly traded company. So you may be asking, what is a publicly traded company? So essentially what that is, it is a company who has decided to go public and sell shares of stock in order to raise money for it to operate. Okay? So it's essentially saying, okay, world, we want to raise money so we can continue to grow and advance and be successful. So we're going to offer you partial ownership of this company in order to help us to accomplish that goal. All right? So people will buy stocks in order to help companies to help companies achieve that goal. But they also, because they're a partial owner, they also want to take advantage of any of the profits that come from that. All right? So that's why a person would buy a stock in order to take advantage of any profits from the profits that a company makes. All right? Okay. So next you'll see these are different indexes, okay? So you likely see these on the television often. It comes on every morning. I am a CNBC junkie. I watch it all the time. But this is really important information to understand. So first and foremost, the S&P 500 is like the bellwether, if you will, are the reflection of how the overarching stock market in the United States is doing. Okay, so it gives you kind of an overarching picture. And so if you see, when you wake up in the morning and you look at what's noted on the S&P 500 and you see that it's green, it's in a positive, that means that things are going pretty well in comparison to the day before, okay, if you're looking at it in the morning, all right? But if it's red, that means that stock prices are down, okay, compared to the day before, all right? So the S&P 500 is something that is, of course, again, a reflection of the overall market, but it also is a representation of 500 publicly traded companies in the United States, okay? And those companies are divided by something called market capitalization. I won't go into the nitty-gritty of what market cap is or market capitalization means, but it's important to know at minimum is that that helps one to determine the size and value of a company, okay? So as you get deeper into learning about stocks and learning about how you might want to diversify your portfolio, remember that word market capitalization, okay? Because that's important, something to consider. Okay, the second thing is the Dow Jones, and that's it's representation of 30 large companies in the United States. And it is also a very good indicator, a bellwether, if you will, of the health of the market. Okay? And then last but not least, we have the NASDAQ. Now, the NASDAQ is primarily composed of tech companies, all right? But not exclusively. So there are other companies on the NASDAQ, but there are many, many tech companies that are listed there. The NASDAQ is actually the second largest stock exchange in the world. So there are a lot of companies that are represented. But when you see NASDAQ, one of the first things that I think at least are tech companies, okay? Another thing that you may see or hear that's associated with tech are the FANG stocks. And so by FANG, that's F as in Frank, A as in Apple, A as in Apple, N as in Nancy, and then G as in good. FANG stocks are also tech stocks. So you will have like the Apples, the Amazons, and things like that are considered to be FANG. right? But that is not the same as the S&P, the Dow Jones, and the NASDAQ, all right? Okay, so these three items are really important for you to know as well. Okay, another thing that you may hear a lot about are bull and bear markets. In a bull market, it typically means that the stock market is going up, okay? Things are going strong. For the last 10 years or so, the United States has been in a bull market, hands down. Prices have been at their all-time highs. When I say prices, stock prices have been at their all-time highs, and things have been looking really, really good, all right? And so that's one direction. The other direction is the bear market, and that means that prices are going down, okay? Now, on Christmas Eve 2018, a bear market was officially announced in the US. And what that means is stock prices fell 20% below its recent high, okay? So a bear market is defined as when stock prices fall 20% or more than its recent high. So what does that mean? Okay, prices are down, prices are low. For me, it means clearance sale, honestly, because that means the stock prices are cheaper, right? So it's a really good time, especially when it begins to uptick and start to trend back up. A really good time to buy in order to accumulate profits along the way, all right? Now, I do want to accentuate it's important to wait for the uptick because in a bear market, you don't know where the low is going to be. Typically, bear markets last on average about 13 months. And so it's important to kind of watch and see and determine when a good time is to buy your shares. All right. I wouldn't buy it like right at the beginning. But when things start to turn around, that's a really good time for a person to consider purchasing shares. All right. Okay. Now, it's important that bull and bear markets do not last always. Very much like seasons, like fall, winter, spring, and summer, we have seasons in our economic cycles as well. Okay. So there's different cycles that we go through, which helps us to kind of level things out, if you will. All right. So everything isn't just constantly going up, everything isn't just constantly going down. It's not winter all the time, okay? It's also not summer all the time, all right? So that's one way to think about it. Okay, and so the last portion that I want to talk about in step 2, it is important for you to understand your options, all right? So when you are an investor or a trader in the stock market, you can do 2 different things, all right? Buy and hold or trade. Buy and hold is essentially in its technical term is called fundamental analysis, all right? So when you are buying and holding, it means that you're buying a security or a stock or ETF or another type of security and holding it for a long period of time, okay? It could be for years, it could be for decades. You're holding it for a long period of time with the anticipation, mostly, that people are going to want the stock price to go up. All right, so you're going to hold that over a long period of time. Now that again is called fundamental analysis, and what people are looking at in order to make decisions about that are the financials. All right, so later in this course we'll talk about where you can find financials, but they're looking at the financials. They're looking at statements like the balance sheet, the cash flow statement, and so forth. All right, and then they're also looking at various ratios like earnings per share in order to determine if this security is something that they want to invest in for the long term. All right, so that's buy and hold. Now, the other option is trading. I am also a swing trader. I mentioned earlier, I'm an investor, long-term investor, so I have positions in various companies long-term, but I also trade. And so that is a way for me to get income on a short-term basis. All right. So the technical term, the official term, if someone is a trader, they're using technical analysis, which means that they are using charts and indicators in order to make decisions about when to enter and to exit a position. Okay? When to enter or to exit a position, which means when to buy and sell a stock. Now, some people trade as a day trader. I actually learned how to trade from a day trader. Or some people trade as swing traders, which means that they're going to hold the position for a longer period of time, which is what I do. So I will buy a stock or buy a stock for a day sometimes, and sometimes I'll hold it for weeks to a month, right? So and then you can also trade other things as well, like options and other types of things too. But the more and more you learn, you'll see what opportunities are available for you. All right. So it's important to know you can buy or hold, or you can trade, which is either fundamental analysis or technical analysis. Okay, so let's move forward with the second half of step 2. This section is entitled Interpret the Optics and then become a stock chart and stock summary ninja. Okay? All right, so let's get going. All right, so here is a stock summary, and what you'll find on this is a lot of information that can help you as you make decisions on whether or not to buy a particular stock. So I want to point out a couple of things. You will see a number of different arrows as well as some circles. So we're going to talk about those areas, but I also want to encourage you that as you begin to learn more, to learn what each of these areas mean, all right? So because all of this will help you to make a well-advised decision as to whether or not to purchase a stock. All right, so we're going to start at the top, and you'll see here it says ticker symbol. And that is basically the symbol that is used in order to identify a specific security. So think of it like an airport code. For example, Atlanta, the airport code there is ATL. In Cincinnati, the airport code is CVG. In other places like Columbus, Ohio, CMH. So there's all different abbreviations, if you will, for airport codes. So the same thing goes for stocks as well, all right? So in this case, Ulta's ticker symbol is ULTA, all right? Okay, the second thing I want to talk about is the share price. So you will see here the share price for Ulta at the time that this screenshot was taken was $285.13. Now, it's important to know that all stocks aren't in the $200, $200, $300 range. They can range anywhere from pennies all the way to thousands of dollars. But on this particular day, Ulta was trading at $285.13 at the time where the screenshot was taken. Now, stock prices fluctuate throughout the day, so it could have gone from 285 to 290. It could have gone, in a couple of different directions, but it's important to know that prices move. And so what you see here may not have been the same price it was like 30 seconds later, all right? So that is the share price. So for example, if you want to buy 5 shares of Ulta, what you would do is you would multiply $285.13 times 5, and then that will give you the total cost in order to buy this particular stock, okay? All right. The next thing that I want to make sure that you are aware of are the financials, okay? So on the right-hand side of your slide, you'll see something that says very important for fundamental analysis. So earlier we talked about people who ascribe to fundamental analysis, they're going to use financial data in order to make their decisions, okay? They're not going to necessarily look at charts as deeply and as closely, if you will, as someone who is trading on a day-to-day or a week-to-week or so forth basis, all right? They want to know, what does the money look like, okay? So in order to find that information, you can go to the financials tab in any website that has stock information and take a look at that, the data that's there, okay? So some of the things that you might want to look at are like the revenue. That's really important. Is revenue increasing over time? Look at the past 3 years. Look at the past 5 years. Is the revenue going up, right? Another important thing would be the cash flow. Do they have money to cover mishaps, right? Things happen sometimes. So it's important that companies have good cash flow available to them. Now, if they are a company that's just starting or considered to be a growth company, they may have some debt. So don't necessarily, it's not always good to hold that against them, but use that information in combination with other information in order to make your decision, okay? And so that's just a number of things that I look at. Again, it's just my opinion. I'm not suggesting that these are things that you do, but those are some of the things that I look at when I'm thinking about my long-term decisions. Okay. Okay, so let's move back over to the left side of the chart. At the bottom, you'll see a red circle that says 52-week range. And so if you're thinking about buying Ulta, so say for instance, this is today, and you're buying Ulta at $285.13. Something that I recommend that you take a look at is where is that in comparison to where it's been over the past 52 weeks. So you may be wondering, why do I say that? It's good to know if you're buying at the high or if you're buying at the low or somewhere in between, okay? It's just good to know that because, again, remember I talked about stocks go in cycles, right? So it's important to know, the economy, there's economic cycles. I shouldn't say stocks go in cycles, there are economic cycles. And so it's important to know kind of where you are purchasing at, okay? The other circle in the middle is earnings per share. And so the reason why I circled this, I won't go into detail regarding kind of what that means as far as the equation and things go, but this tells you, okay, is this company making money? Are they making money, right? Some companies have a negative earnings per share. So guess what that means? They're not making money, right? At the particular time that you're looking at it. So just make sure you take a look at earnings per share too, and make sure that they are in the positive as you're thinking about which stocks to buy. The third circle, the one on the right-hand side, is really important as well, because this shows you that you can look at stock charts that range across a couple of different time periods. So you'll see a 1 day, 5 day, 1 month, 6 month, year to date. You can also look at 1 year, 5 years, and then you can look at the maximum chart that they have available as well. All right. So just want to make sure that when you're looking at a stock summary, know that you can also have access to charts on different time frames. Okay, so let's move on and let's look at a chart. Okay, so this is Facebook. As you will see on Facebook, there is a ticker symbol there as well. So hopefully you recognize that. Facebook's ticker symbol is FB. Again, I've circled the fact that you can look at different ranges, different date ranges for this chart. And this particular chart is a 6-month chart, okay? So 6 months is in bold, so that tells you this is a 6-month chart. I wanted to point out a couple of things here, specifically for those who may be interested in learning how to trade, okay? I wanted to show you where some things the traders will be looking at if they were trading Facebook during this particular time frame. So let's imagine that this is, you can say it's a day, or you can say it's 3 months or a month or what have you, but just think about kind of what I'm saying as far as what they'll be looking at for different fluctuations in the market. So the first the first arrow that you see here is pointing at an area of the chart where the prices begin to trend upward, okay? So that is something that someone who is trading stocks will be looking for, is a reversal, if you will, in price movement. So initially, the prices were going down, and then this candle, these things are called, the green and the red symbols are called candlesticks, Japanese candlesticks. The trend reversed and it started to move upward. Okay. So that would be something that someone who is trading stocks, in order to capitalize on fluctuations in the market, will be looking for. All right. The next thing I want to show is the middle arrow that has the arrow points on both ends. And essentially what this is showing you is that there is a gap, a pretty significant one. So I'm not sure what was happening around this time. Sometime in summer, it looks like. That could be when Mark Zuckerberg was before Congress, so this could have been earnings or something. But for some reason, the stock price just plummeted, right? So that's what caused that pretty significant gap there. And so again, someone who is trading would look at this, and if they were anticipating that the prices would continue to trend upward, and they had shares in Facebook and it dropped that way, they lost money, okay? They lost money during that particular time period. But so say for example, this was the date when Mark Zuckerberg had to go speak in front of Congress. Um, if the trader was thinking, okay, something might happen to this stock, and they decided to take a short position, meaning that they are thinking the stock price will go down, then they also made money going down. They made money going down, okay? So as the stock price dropped, they made money along the way, right? Hopefully that makes sense, all right? So in other words, you can make money when the stock market goes up, as well as when it goes down, okay? You can make money when it goes up, as well as when it goes down, right? So the last arrow that I want to show you is pointing just at another area where the stock market began to trend downward. And so that is another potential entry point for someone who is using technicals to make decisions, to then say, okay, I want to place a short position, meaning that I want to make money as the stock market goes down. Okay? All right. All right, so next we're going to move into step 3. I will see you soon.